Okay, let's see here. First thing I want to do is shut off that there. Okay. Okay, this one really doesn't matter. It's more of this one right here. And let's see the camera on here. There it is. How y'all doing today? I'm gonna get some TA going, right? And all right, that was fun. So let's see here. Now, what you see on the screen is some indicators that I've created with cycle analysis, and I've infused them with other aspects too, like CBD, accumulated volume delta. I have the price action one. I have the whales and the institution ownership indicators also that are on the graph, amongst other things too. Signals that help me decide, when a good time is and when a bad time is. So this was my original, forecast right here. I'm going to leave it on there, but it looks like it kind of rolled over right here and broke that trend line that we had going on here. Then we got two bearish fair value gaps that are around the price of each center that we could say $5. It's like 4.95 or something. So yeah, we're gonna have to break through that. Then this is also resistance as well. Now we got some positive bullish fair value gaps down here, and it looks like we've almost cleared this one. The next one to be cleared, if we continue to fall down, is going to be this one here, which puts us at a price of say like $4. So it's a good possibility that we could struggle to maintain a bottom until it drifts off to around $4, and then finds support and then pops back up. But there's other due diligence going on here too. I've got the cycle analysis with the price action on here measured out to what I believed it was going to respond to, how it flows, but it looks like um, it needs to be recalculated, because the math I was doing was that when it was on an uptrend, like back over here, the the cycles were short, right, and then eventually went into a elongated cycle here after popping up. But you can see every cycle top here, here, and here is higher than if you get to the trend line, we can draw a trend line across it, right? And that's the purple one. That's this one right here, right? There, there, and then there. But at the same time, price was going up, so that makes a divergence. There is a divergence indicator that went off right here on this one, but you could actually take it back to here, and with the cycles, unfortunately, it's going to pierce price, but we want to kind of like line it up, so it would be with this one here. That's how this one here would end the cycle before it goes down. So that would be that. And then they had a divergence on stochastic, which is this one right here. Well, it's basically the hyperwave, but it's nevertheless it's still kind of like the same thing. Um, and there's a couple good takeaways from this chart. Let's see here, like how you had this buildup going and then it just dropped off, right? Then you had like this buildup going and then it just dropped off. You had like a stagnation of a buildup going and it dropped off. And each buildup in itself was smaller and smaller as price was going higher and higher. So that's another, takeaway from it. Um, there you go. And now the background colors with these bars, this is indicating certain areas of interest, right? When you get the dark blue and light blue collaborating, that's going to be like a significant area. You get the red and the orange collaborating, that's going to be a significant area. But I think I need to readjust it and only have like the most, it's like I'm pretty much, building out and expanding and then consolidating it or, condensing it and then building up and expanding and condensing it and building up and expanding and condensing it, taking the best parts out of everything that I've accomplished, right? So like on this one here with the price action, I could swap it to the CBD cycle analysis rather than price action cycle analysis, which I already have here on the bottom, which is this one here. This is that cycle analysis. The center one is going to be the whale buys and sells. Now there's a cool down time for the signals, and that's what this area zone is. That's the cool down time, and it reflects if the move has more sustainability to move forward. So um, I guess for this one here, you could see right how the area was right here. It started building up as the indicator was giving signals as well. Then right here it dropped. So that was the end of the downward pressure, which is the inverse version of when you want to buy and sell. So this here is the good buying opportunity, and this here would be considered, depending on your time frame when you want to buy and sell, right? Would be the selling opportunity, and then the buying opportunity, the selling opportunity. Nothing goes up or down in a straight line, right? So depending on what you're looking for, right? I personally use this for covered calls and cash secured puts. 'Cause I'm a long-term investor as well as a trader. So I want to capitalize on multiple different aspects at the same time. And you really can't do that with just one idea running. If you're like, just all fundamental analysis, all well, the price, I'm not going to sell any covered calls. I'm not going to do any cash secured puts until it reaches a certain, my criteria is on point that I won't even give my chance. I won't even give it a chance to play with it or whatever you want to call it. But fortune favors the brave. So if you want to be in cushion mode, you can sit down in your little cushion soft area. You know, but I think I'm a little bit more progressive than that. As you can see, right? So when I built the cycle analysis indicator with price action, it was meant for finding tops and bottoms, basically, and paired with, or, combined with um, this other indicator here, the whales, buys and sells and institutions. And then I upgraded my cycle analysis with price action and added in another aspect to it. That way it does CBD too. So it'll tell me prior tense, like, first strike. If you like video games, right? First strike, right? So, like, this is the way I see it. This was my idea when I was creating it. Okay. So because as accumulated volume density, so it's accumulation basically, that's all it is, right? Rather than price action. So if you tie them in together, you can actually pinpoint a area of like significant you know interest. Um, as you can see here, I got this FP that basically means that the the progression is sustainable, it's moving forward as far as accumulation is concerned. It's almost like I guess you call it an iceberg order indicator, almost, right? But so as you can see, the smaller time frames, which is I got here, I got 3 day, I got the 6 day, and I got the 21 day, right? Then it also tells you if it's bearish or bullish, momentum is up or down, right? The day, the cycle number, blue is blue. So you can see here how the lower time frame cycle on the accumulated volume delta continued to drop, and this candlestick in the background is the accumulated volume delta, the raw accumulated volume delta on the daily chart, right? So it's not doing cycles. It's just presenting itself. Um, I could tie it into the actual price action, but I'd rather have it down here. It makes more sense. So as you can see, the price action continued to have these really oversold areas here and here, and then you had one here too. But the signal, right, built it built downwards, as in it wasn't really doing any. There wasn't too much, too much action going on there. There wasn't too many participants. If anything, they were like just saying, "Ah, fuck it, I'm not going to buy right now." So it flipped down. Then that would give like the the aspect or the idea, right, of it's slowing down. It's not moving in the right direction right now, even though you got the longer time frames saying that, hey, it's still building up, right? This is a caution sign. It's like this is a caution sign for actually participation really coming into the game, right? This is a caution sign for participation really not being part of it. So as it flipped negative and it went down, right? Even though the longer time frames were going up, the 21 day, you could still see that the 3 day moved down and had a cycle up and then went back down, right? So the the object, the way you want it, or the way I do this, right, is to try to get it to where they're inverse to one another, right? Saying CBD is going up, price is going down, right? And you got a divergence there, and that means that big money's buying, especially if you get the whale indicator really showing some signals. Once it turns blue like that in the area indicator, right? Combined with these moving up, right? With the trigger saying that there is participation happening now, with a bottoming zone of price action, amongst other things too. You keep on expanding on it. Then I have a little table over here. Well, it's not little. I could change the size if I wanted to. I can tell you what the cycles individually without having them on the chart. Described in a in a table. Um, and it'll tell you, like I got the monthly, I got the 3 week, and I got the 2 week, right? And I got the 1 week, the 3 day, and the 1 day on the daily cycle, and so on, hourly, minute. Then I got the summary between the minutes, the hours, the days, and the months or weeks. I mean, um, combined all together to come out to a ratio if it's a bullish or bearish, right? If it's momentum is up or down. And then on top of that, I got an accumulated volume delta scorecard that basically tells you that within this time zone, right? Was there any buildup coming? Was there a lot of people participating in the move, right? So times 1.5, right, on the sell side, dominating, even though it says accumulation and it's green, saying it's strong, right? It's still on the sell side. It has 1.15% more um, than less, and it cuts it up. You got 15% there, you got 4% there, you got 1.2%, and so on, right? Balanced on the 1 day, it's falling, right? Um, and then the cycle, this is the level it's at, depending on where the numbers fall in, key numbers fall into place. And then you have the how many of them are up, how many of them are down in the summary. So it's pretty much, it is what it is. It's like, I got it named as the apex cycle matrix, right? Cycle analysis. So yeah, the weekly cycles are all intact for an upward move, right? Rising. The daily is falling. You got the master one here too, right? It's neutral. It basically combines the minute, the hour, the day, and the week, and puts it all together into one sum. It's chop. It's neutral. There's no edge. Buying is higher, but it's mixed. So yeah, once you get used to looking at this chart, you'll be able to know what it's saying without even having to read it, just by glancing at it. You're like, okay, well that's negative, that's positive. Which one's going to be dominant? Which one's not? So the longer time frames dominant than the smaller time frames, and that's the gist of it. You can always just go straight to the master indicator, which takes, like I said, it takes them all under consideration, averages them out, and tells you, you know, what's actually happening here. Um, but for the daily, right, it's all just pure price action, and I got it at the was it 3 day, 6 day, and 21 day. Now I knew that this thing was going to flip over prior tense. I mean, it wasn't saying it too much here, but you could see how these red bars started slowly declining, right? That's a drop off. And even though some of the orange bars continue to roll it forward, I think the red bars dropping off holds precedence over that. But as long as we got this purple, you know, area buildup still there, a continuation is highly possible. The only way that would fail, right, uh, is if this thing completely just dropped off and then you started seeing some build up underneath of the selling rather than the buying. As far as the accumulation volume delta cycles are concerned, right here was a hot spot. And typically, if you trade off of cycles, right, you always want to buy when it's down in the lower region and sell when it's in the higher region, and buy when it's in the lower region, sell when it's in the higher region, and just keep on tracking along with that idea. Nothing's perfect. Nothing's going to be 100%. Um, but yeah, there's one strong fair value gap right there, like $4.90. That needs to be breaking. We need to reclaim that zone in order to really start working our way forward. As of right now, the 3 day cycle has weakened to a point where it was already telling you in advance that you could see some type of contraction, you could see some volatility, you could see some type of consolidation, whatever you want to, however you want to split the apple. It's basically telling you exactly that. There's the strength is dying, right, in the short term. In the long term, it still continues to hold up, but on the 6th day, it had dipped underneath, right? And it's still trying to maintain, that upwards direction, right? Even though it's below. So since it's below the lower time frame from the 6th day to the 3 day, lower time frame now holds more precedence than it did if the 6th day was still, um, in the region of the 21 day. So like it was here, you couldn't see anything because they were all in the same region, the same, level. But since this one failed right here and started working down, that gave this one, you know, it gave this one more accuracy, if you want to call it that. So yeah, could have seen this rollover coming. I know I did, um, but it's still going to come to a reasonable bottom. There's other due diligence that's involved in this. Um, so that's how that works. And then over here, you can see how there was a sell signal there, right? And the orange is stronger than the red, like the light blue was stronger than or the dark blue is stronger than the light blue. I need to get rid of the green. I need to get rid of the green. That's short term movements. I really don't care for that too much. And I probably will get rid of maybe the light blue too and the red. So it'd be like the green, the light blue, the red. Oh, that way I can only have like the dark blue and the orange. That's going to be more on point. Now, with this one is basically saying the same thing the other one did, right? See how it rolled over the red bars, taking precedence over the direction that it was going to be headed into. Then you can see there was a rollover here. It was at extremes. Mm, it went negative right there on this wave. Went from blue to orange. Now it hasn't done that since down here at this bottom, which is around $1.75. Splitting it down the middle, or you can say 175. And then we have this uptick uproar coming up. It went blue and never turned orange. It just steadily stayed and then popped right there, right after this signal ended. Right there, it turned orange. That was a downwards movement. Price action on this one, cycle analysis on this one is a little bit different compared to the other one. Um, and this one here, this red line, I use it for a biased case scenario. Like if it's above the white line, let's say the white line is the VWAP, and this is going to be price action, right? So if this white line is the VWAP, and then this red line is the price action, and anything below it is basically being biased to the downside, and everything above it is basically being biased to anything to the upside. Of course, you got your extremes here and here, right? So that's caution, but most likely the best time to try to utilize that is like right when it starts to flip over, after oversold or overbought. If you want to get in on it on the move, right? So that's the way I use it. I use it like a VWAP and price action type of deal. But right now we're definitely below, and it went below about right here. That's when this signal first appeared. Now I have my cycle analysis on the background here, which says by September we should start seeing some type of bottoming forming on this one. And if I'm correct, then it should be something. I need to check the resistance areas, but it should be something like that happening, right? So yeah, that's that. Oops, rewind. This one is pretty much like that one, except I had my forecast on it. And it does have another version of cycle analysis. Right here, these are considered to be zones of interest for bottoms. Where the zone is, the dot is the center of it. But just the zone within itself, it's suggesting some type of base forming, where it has it down here in this area. So the center of it is going to be January the 12th. Then if you split the difference between these two, you're going to say like August, middle of August, um, for that. Then you have another one that's kind of hard to see here. Let's see if I can get it. You got these three right here, and that's what I think we're running into. This one, this one, and this one, right there. In the center of that one, which is probably the center of these two also, it's going to be July the 15th, right? For some type of short-term bottoming coming into play. So that's when I expect the price to probably fill this gap or at least test it, right? So I'm looking at maybe 420 to $4, somewhere in between there should be this zone bottoming out. Then of course we got resistance right here. We're left off at 550. Yeah, 550. And this one's more for like, I guess you would call it scalping the covered calls, cash secured puts option chain. But I don't use it for day trading because I got a job. Um, but it's going to come in handy. I'm building it. As time goes, things change. And if I have the tool I need and it's available, then I'm going to utilize it. So it's all about just creating tools as of right now. Um, so yeah, if the 3 day does get to the oversold zone, I'm going to start going long. I got to be a little bit picky about this. I would like the 3 day on the daily or the 3 day on the price action to also be in a oversold zone with CBD in an oversold zone. So we get both of those in the oversold zone. That's prime time, baby. At least for me, it is. Now, that's just time itself. Now, price, like I said before, it's going to be in between 420 to like $4. So you get time and price together. Um, there's no. I used to have an indicator that predicted, how long it would take to get there, but I kind of just put that on the back burner because it needs to be improved. It's not as good as I would want it to be. It needs to be better. So I got that on the back burner. I'm not really utilizing it anymore. Um, and I did have something else here. Let's see. Mhm. Okay. I need to update some of the information that it has. That's what I was in the process of doing. It looks like I didn't finish it. But we could run it as is right now. And the next time I start talking about this or whatever, um, then we'll run with it. So let's see her. Read out loud.
You're right. The research widget failed again, so I'm stopping that route completely. Here is
Mhm.
the study built directly from your screenshots, your options chain data, and the Clov due diligence we've been building. Tap Clov forward thesis. July 2026 through early 2027. Core thesis. Clov is in a short-term bearish correction inside a larger bullish structure. The current price action is ugly because Slov lost the $5 battle
Slove.
zone and is now trading around the 440s. That puts pressure on your $5 cash secured puts, kills a lot of near-term call premium, and makes July more of a shakeout reset month than a clean breakout
Damn
month.
it.
But the bigger thesis is not broken yet. The long-term setup still has bullish evidence from TA, cycle structure, weekly trend, still constructive options, chain still showing upside positioning, large call OI in 2027 and 2028. Continued AI counterpart thesis. Clover profitability trajectory from our prior DD CMS star rating upside narrative, prior bookmap liquidity zones underneath price dark pools, accumulation framework, short interest, squeeze potential if price reclaims key levels. So the best summary is Clov is short term damaged, medium term in a test, but still long term bullish unless it loses the $4 area and fails to recover. Number one, technical analysis red. Your charts show a very clear structure. April low, accumulation base, strong markup phase, rejection near 550 cents, current pullback into $4.40s. That means the stock is not in a clean bullish continuation right now. It is in a correction, but it is also not automatically broken. The most important thing from your TA is that the short-term cycles are rolling over, while the larger weekly structure is still constructive. That matters a lot. When short-term and long-term cycles disagree, the usual read is short-term pain, larger trend still alive. Your Apex cycle matrix screenshot basically confirms this. Minute, hour, daily, bearish pressure, contraction, sell pressure. Weekly cycles still rising, expansion, bull control. Master read, chop, neutral, not full trend failure. That means the stock is currently correcting inside a larger bullish framework. # major support zones. The support map is now 440, 450, current broken battle zone, first stabilization area. 4025 next real support, major psychological and structural line, 340 to 365, deeper demand, liquidity support zone. 300 meet map, prior book map, liquidity support zone from our earlier work. The important part is this. A pullback to 425 cents or even $4 would still be acceptable if buyers defended. But if Clov loses $4 and cannot reclaim it, then the odds shift toward a deeper correction into the 340, 365 zone. Upside reclaim levels. The recovery path is just as clear. 450, first stabilize A5, bounce becomes believable. 5. Options chain reclaim level $5.50. Bullish call pressure starts waking back up, $6. Momentum confirmation 7. Major options chain magnet $8.50, $10. Late year bull target zone if momentum confirms. Right now, $5 is the single most important level. Until CLOV reclaims $5, the short term chain is still pressuring put sellers and burning calls. Number 2. Options chain read. The options chain is mixed, not dead bearish. The bearish part is obvious. Clov is under $5, so the market is burning the $5.50 and $6 calls. That makes the short-term chain bearish until price reclaims the $5 zone. But the bullish side is still there. The most important bullish options chain signals were 724.7 calls added plus 633 OI plus 41%. That is the biggest short-term bullish speculation signal. It does not mean Clov is going straight to $7, but it shows traders are still betting on a late July upside move. 717, 5 calls, still around 6 down, 255 OI. That keeps $5 as the main battlefield. If price reclaims $5, those calls matter again. 821, 5 calls, around 8,069 OI. That says August still has recovery positioning. Jan 2027 and Jan 2028 expirations are heavily call weighted. That is important because the market is still carrying longer dated upside exposure. The big money is not only playing a 1 week move. What the options chain is really saying. The chain is saying short term, bearish pressure under $5. Medium term, upside bets are still alive. Long term, the market still has a bias through 2027, 2028. So this is not a Clov is dead chain. It is more like they pushed price below the short-term call stack, but traders are still positioning for upside later. For your current $5 CSP expiring 724, the updated odds remain. Assigned on $5 puts, 55%, 60%. Clov reclaims $5 and puts expire worthless, 30 to 35%. Strong rebound above 550 before expiration, 10 to 15%. That plus 41% increase in the 724/7 calls helps the bull case, but it does not directly protect your $5 puts. It only matters if Clov first reclaims 450, 475, $5. Number 3, bookmap liquidity thesis. From our prior bookmap work, the important liquidity zones were not just above price. There was meaningful support liquidity below, especially around the 340, 320 area. That matters because this current drop may not be random. It can be interpreted as a liquidity sweep, premium burn/shakeout. The market may be doing three things at once. 1, burning the short-term calls that were stacked at 5 to 6. 2, pressuring the $5 put sellers, testing whether real buyers step in at deeper liquidity zones. That is why I do not want to call this a failed bull thesis just because Clov broke $5. The better question is, where does real demand show up? If demand shows up above $4.425 fence, that is constructive. If price drops into 340, 365 cents and gets absorbed hard, that could still be a larger accumulation retest. But if price slices through $4 through 365 and cannot reclaim those levels, then the bullish structure weakens significantly. Number 4, dark pool institutional read. For the future forecast, the dark pool thesis only matters if it supports one of two outcomes: accumulation on weakness or distribution into strength. Our working thesis has been that Clov has shown signs of accumulation over time, especially as the company's fundamental story improved and the stock built a larger base. The forward read is this: if dark pool activity continues showing large prints during weakness while price holds major support, that supports the higher low accumulation thesis. If dark pool prints start appearing heavily into rallies near 550, 6 cents, and price cannot break through, then that would suggest distribution supply overhead. So the key dark pool question going forward is, are large players absorbing the sell-off, or are they selling into every bounce? If they are absorbing, the end-of-year bull case stays strong. If they are distributing, the stock may need more time and could stay trapped under $6 longer. Number 5, CVD whale activity read. From our prior work, we agreed that the whale indicator should be read by where the bars print, not just the color. Upper half bars equals whale buying, lower half bars equals whale selling. The current setup looks like momentum has cooled, but the larger trend has not fully failed. The bull case needs to see whale selling fade, CVD stop bleeding, buyers step in around $4.25. For those zero price, reclaim $5 with rising volume. The bear case strengthens if whale selling persists below $4.50, CVD keeps trending down, price loses $4 with no absorption, bounces into $5, fail repeatedly. So CVD whale activity is now a confirmation tool. It does not need to be perfect today, but it needs to improve before we call the next leg higher active. Number 6, fundamental thesis. The long-term bull case is still built around Clover transitioning from a struggling Medicare Advantage story into an AI-enabled healthcare operating story. The key pillars from our prior due diligence are Counterpart AI software adoption improving cohort economics, Medicare Advantage growth, SG&A leverage, path toward GAAP profitability, star ratings, CMS upside potential, long-term operating leverage if the AI model scales mess. The CMS star rating issue matters because Medicare Advantage star ratings directly affect plan economics and bonus payments. CMS has previously had to revisit Medicare Advantage quality ratings after legal challenges, which shows how material this issue can be for insurers. For Clov, the bull thesis is not just more members. The real thesis is, can Clover prove that Counterpart improves medical cost management and creates better margins over time? If yes, the market may eventually stop valuing Clov like a small Medicare Advantage insurer and start giving it some credit as an AI-enabled healthcare platform. That is where the big upside comes from. Number 7, macro sector overlay. The macro piece is secondary, but it still matters. Clov is a small cap healthcare tech hybrid. That means it is sensitive to interest rate expectations, small cap liquidity risk appetite, healthcare regulation, Medicare Advantage sentiment, AI theme appetite. Our prior macro rule still applies. Slow, controlled Fed easing equals bullish for small caps. Hard, fast cuts caused by economic stress cause crash risk. So, for the end of year forecast, Clov benefits most if the market gets stable risk appetite, small cap rotation, no major Medicare Advantage shock, AI healthcare interest, returning company execution, confirming the thesis. If the broad market risk off environment hits, Clov can still be fundamentally strong and yet trade lower temporarily. Number 8, probability weighted forecast. July 2026. July is now a shakeout, premium burn, support test month. The most likely July range is 4. 5.25 updated July probability map. July outcome odds. Stays under $5, CSP assignment risk remains 45%, reclaims $5 but stalls under 550, 30%, pushes 5 for 50, 625, 18%, fast push above 625 fence, 7%. July is not the clean bull month anymore. The win condition is simple: hold fall 425, then reclaim $5. August 2026. August improves if July stabilizes. Expected August range $4.50, 6.25 probability map. August outcome odds still trapped under $5, 25%, 5 to 6 recovery zone 40%, 6 to 7 bullish recovery 25%, above $7 10%. August is where the 821 $5 call OI becomes more important. If SLOV is above $5 going into August, the chain becomes more supportive. September, October 2026. This is where the larger cycles can matter again. Expected range if structure holds $5.50, 750 probability map. SEPDOCT outcome odds failed recovery under $5, 20%. Base building 5, 6, 6, 35%. Bullish push 658, 32%. Squeeze momentum over $8, 13%. This is the window where Slav can start moving back toward the bigger call walls if it survives July, August. November, December 2026, end of year projection. Scenario, price target, odds. Bear case $3 450, 18%. Repair case 450, 6, 22%. Base bull case 6, 750, 32%. Strong bull case 7, 10, 20%. Squeeze speculation case $10 to $12.50 plus 8%. Probability weighted end of year target. Using those scenario weights, my blended end of year target is around number 650, $7. My main end of year target zone is 6 to 750. My bullish target zone is 8 to $10. My high end squeeze target is 10, 12.50 plus. But to be clear, 10 plus is not the base case. That requires confirmation. The stock needs to reclaim $5, $5.50, 6, 7. Without that reclaim path, the high end targets stay theoretical. Number 9, early 2027 projection. Early 2027 remains important because the options chain is heavily call weighted in January 2027. That supports the idea that bigger positioning is looking beyond this July correction. Early 2027 probability map. Scenario, early 2027 target. Odds. Bear delayed thesis $4 to $5.50, 20%. Base continuation $6.50, 85, 35%. Bull continuation 8 and 50, 11, 30%. Expansion squeeze case $11 to $15, 15%. My early 2027 base target is have $7.950s. Strong bull case $10 to $12 plus. Extreme case number $15. But that extreme case requires execution, momentum, short pressure, and options alignment. Number 10, catalysts that matter. These are the only catalysts that matter for the future forecast. 1, reclaim of $5. This is the first technical options chain catalyst. 2, reclaim of $5.50. This turns the options chain back into a bullish pressure system. 3, strong earnings, profitability confirmation. The market needs proof that the operating story is real. 4, counterpart adoption, expansion updates. This is the AI healthcare multiple expansion catalyst. 5, CMS star rating upside. Any positive update here can improve the earnings narrative. 6, small cap rotation. If small caps catch a bid, Clove can move faster. 7, short pressure reset. If shorts get trapped above $6 F, squeeze risk comes back. Invalidation levels. The bull thesis is not invalidated just because CLOV is under $5. The real invalidation ladder is soft warning, failure to reclaim $5 by late July. Medium warning, daily close under $4. Hard warning, break under 3.65 with no reclaim. Major thesis damage, sustained trade under 340 cent. Full structure failure, break below 3.90 cents and failure to recover. If Clov holds above $4.425, the larger bull structure remains intact. If it flushes into 340, 365 cents and buyers absorb it, the thesis is wounded but still alive. If it loses 320, 340, the end of year bull case drops sharply. Number 12, final thesis. My final thesis is CLOV is in a short-term bearish correction, but the larger 2026 to 2027 bullish thesis remains intact. The current price action is bearish because CLOV is under $5, and that pressures the $5 CSPs while burning near-term calls. But the options chain is not dead. Traders are still adding upside exposure, especially the $7.24 $7 calls, the $8.21 $5 calls, and the heavy January 2027, January 2028 call positioning. The TA says the same thing. Short-term cycles are bearish, but weekly cycles remain constructive. That makes this a higher low test, not a confirmed breakdown yet. The fundamental thesis still supports higher prices if Clover proves that counterpart AI improves cost control, scales adoption, and helps drive profitability. So the future forecast is July ugly shakeout, premium burn, support test. August, possible recovery if $5 is reclaimed. September, October, larger cycle can restart upward. November, December, target zone 6,750 base case, $8-10 bull case. Early 2027, 7. 950 base bullish target, 10 to 12 plus strong bull target. The cleanest one-line thesis is, if Clov holds $4.425 and reclaims 5, the end-of-year target is $6.50, $7.50, with a realistic bull case toward $8 to $10. If COV loses $4 and fails to reclaim it, the correction likely extends toward 340, 365 cents before the next real attempt higher.
Yep. So I've been doing my due diligence on Clover Health with technical analysis, fundamental analysis, everything, dark pool options, you name it, right? Different forms of technical analysis, different forms of fundamental analysis, and I've been expanding and condensing, expanding and condensing, expanding and condensing. And then everything's stored away in memory. I did mess up though when I first started. I thought that it had some kind of internal memory when I deleted my chats. It just deleted all the conversations and all the due diligence. And I had to restructure it. But yeah, it makes sense now. So yeah, that's pretty much the gist of it. I got anything else for you guys? Is that almost 50 minutes in? All right. Well, y'all have a nice day. $10 by the end of the year or what? Come on, guys, let's go. $10 by the end of the year. Let's go, let's go, let's go, let's go, let's go.